Chapter 1. The Golden Age, 1850 to 2000. In 1850, three brothers, Henry, Emmanuel, and Mayer Lehman, opened a small dry goods store in Montgomery, Alabama. Cotton plantations surrounded them, and they began trading cotton. Millions of dollars from cotton millionaires flowed through Lehman's hands. By 1870, they moved to New York City and claimed their place on Wall Street. Stocks, bonds, trading, everything began. Lehman Brothers slowly became the backbone of American finance. After World War II, Lehman grew even larger. In the 1970s, they entered investment banking. IPOs, mergers, acquisitions, no major deal happened without Lehman. In the 1980s, they worked with junk bond king Michael Milken. In the 1990s, they rode the tech IPO wave. By 2000, Lehman was Wall Street's pride. 28,000 employees. Offices in 40 countries. CEO Dick Fuld, known as the Gorilla of Wall Street, earned $40 million per year in salary. He believed, Lehman is too big to fail. Chapter 2. The Real Estate Drug, 2000 to 2007. In 2001, the dot-com bubble burst. The stock market crashed. The Federal Reserve slashed interest rates to 1%. Money became cheap. Loans became easy. People started buying houses, those who could never afford them before. Banks gave them loans, and a thing called subprime mortgage was born. What did Lehman Brothers do? They invested like madmen in real estate. They bought mortgage-backed securities, MBS, thousands of home loans packaged together and sold. Rating agencies said, AAA rating, completely safe. From 2003 to 2006, Lehman's real estate business grew by 300%. They poured billions into Las Vegas, Florida, and California. Fuld would say, real estate never falls. In American history, home prices have never declined. But home prices were rising artificially. Speculators were buying. Banks were giving loans to people with credit scores below 500. No-doc loans, no proof needed. Liar loans. People lied on loan applications. In March 2007, New Century Financial, a subprime lender, declared bankruptcy. The first warning. But Fuld said, this is a small incident. Lehman is strong. Chapter 3. The cracks begin, 2007 to 2008. In August 2007, Bear Stearns, another major investment bank, was on the verge of collapse. The Federal Reserve arranged for JP Chase to buy Bear Stearns. Bailout. The market breathed. Everyone thought, the government will save the big banks. But Lehman? They kept buying more real estate. By the end of 2007, they bought Archstone, the world's largest real estate company, for $22 billion. Fuld said, the market is at the bottom. Now is the time to buy. In March 2008, Bear Stearns was in crisis again. JP Chase bought it for $2 billion. The Fed helped. Lehman employees thought, they'll save us too. But from March to September, Lehman stock fell 70%. The value of their mortgage-backed securities neared zero. Credit rating agencies downgraded them from AAA to junk. Counterparties, those who traded with Lehman, began to flee. What did Fuld do? He called Hank Paulson, Treasury Secretary, Ben Bernanke, Fed Chairman, and Tim Geithner, New York Fed President. He said, save us, or everything will collapse. Chapter 4. That terrible week, September 8th to 15th, 2008. Monday, September 8th. Fannie Mae and Freddie Mac, the two largest mortgage companies in America, were placed under government conservatorship. $5.4 trillion in mortgages in their hands. The market shuddered. Lehman stock fell further. Wednesday, September 10th. Lehman announced a $3.9 billion loss, the largest in its history. Stock fell another 40%. Credit default swap, CDS, spreads skyrocketed. Betting began on whether Lehman would default. Thursday through Friday, September 11th to 12th. The Federal Reserve called an emergency meeting in Manhattan. Every major Wall Street CEO arrived: JP Morgan, Goldman Sachs, Morgan Stanley, Citigroup. Mission: save Lehman. But no one would buy it. They had their own problems. Saturday, September 13th. Bank of America and Barclays were asked to buy Lehman. Bank of America leaned toward Merrill Lynch, another sinking bank. Barclays showed interest, but the British government said, "No, you cannot take that risk onto your balance sheet." Sunday, September 14th. Midnight. Fold called the Federal Geithner said, "No bailout. No government money will be used to save any bank." Fold broke down. 158 years of history. 28,000 employees. All over. Chapter 5. Monday, September 15th, the black day of the world economy at 4 a.m., Lehman Brothers filed for Chapter 11 bankruptcy. $639 billion in assets. $619 billion in debt. The largest bankruptcy in history. Second place? WorldCom, $104 billion. Lehman was 6 times larger. At 9:30 a.m., the stock market opened. The Dow Jones dropped 504 points in 1 hour. The S&P 500's largest single-day drop since 2001. Lehman employees began to cry. Their stock options were worthless. Some packed their belongings in cardboard boxes and walked out. But this was not the end. Lehman was Wall Street's counterparty, the middle link in thousands of trades, derivatives, and CDS. With Lehman's death, AIG, the world's largest insurance company, began to sink. They had sold CDS on Lehman. The Fed had to inject $85 billion to save AIG. Money market funds collapsed. One fund broke the buck. NAV fell below $1. Ordinary people's savings were at risk. The credit market froze. No one would lend to anyone. Because who knew who would sink the next day? Goldman Sachs and Morgan Stanley began to sink. They were also investment banks. They had to convert to bank holding companies. Mitsubishi UFJ poured $9 billion into Goldman. Within 1 week, the Dow Jones fell 2,000 plus points. $10 trillion in wealth evaporated worldwide. Iceland's banking system collapsed. Ireland, Greece, Spain, Italy. Europe's bankrupt nations emerged one by one. Chapter 6. Devastation across the world. In the United States, by March 2009, 8.7 million jobs were lost. Unemployment crossed 10%. General Motors and Chrysler headed toward bankruptcy. The housing market fell 30%. Millions of people lost their homes. In Europe, banks began sinking one by one. Northern Rock, RBS, Fortis, Dexia, Hypo Real Estate, government bailouts. The Eurozone crisis began. Greece asked for a bailout in 2010. Then Ireland, Portugal, Spain, Cyprus. PIGS, the nickname for the bankrupt nations. In Asia, China's exports fell 20%. Japan's economy entered recession again. India and Brazil's growth was cut in half. Commodity prices crashed. Oil prices fell from $147 to $32. Bangladesh felt the impact too. Remittances fell. Garment exports declined. The stock market crashed in 2010. 11. Chapter 7. Why wasn't Lehman saved? The question haunted everyone. The government saved Bear Stearns, AIG, Fannie Freddie, but why not Lehman? First, political pressure. After the Bear Stearns bailout, Congress and the public were furious. Why are taxpayer dollars saving rich bankers? Paulson and Bernanke feared another bailout would cause a revolt. Second, legal limitations. The Federal Reserve could only lend to solvent banks. Lehman was insolvent. Its debts exceeded its assets. The Fed's hands were tied. Third, the miscalculation. Paulson and Bernanke thought, Lehman dying will shock the market, but it will recover. They didn't understand that Lehman was the center of global finance. Its death meant systemic collapse. Fourth, lack of time. Bear Stearns had 1 week. Lehman had only 2 days. No private buyer was found. Barclays was blocked by the British government. Paulson later wrote, "We made a mistake. Lehman should have been saved. But at the time, we had no tools." Chapter 8. By the numbers tell the story more brutally than words ever could. Lehman's assets stood at $639 billion against $619 billion in debt. The stock market dropped 2,000 plus points in 1 week. $10 trillion in wealth evaporated worldwide. 8.7 million jobs were lost in the United States alone. U.S. GDP declined by 4.3%. AIG required an $85 billion bailout. The TARP Bank Bailout Fund reached $700 billion. The Federal Reserve's quantitative easing totaled $4.5 trillion. The IMF estimated global GDP loss between 2008 and 2012 at $22 trillion. Chapter 9. The lessons. The fall of Lehman Brothers was not just the death of a bank, it was the failure of a system. First, too big to fail is a lie. Lehman proved that no bank is too big to fall. And when it falls, it drags everyone down with it. Second, the importance of regulation. After the Glass-Steagall Act, 1933, was repealed, investment banks and commercial banks merged. Risk increased. The Dodd-Frank Act, 2010, brought back some restrictions. Third, the fault of rating agencies. Moody's, S&P, Fitch gave AAA ratings to junk mortgages.
Why?
Because banks paid them. Conflict of interest. Fourth, the bonus culture. Lehman traders took millions in bonuses yearly by taking risks. The downside? When the company sank, employees lost jobs, but CEOs parachuted out with golden parachutes. Fold's net worth is still $350 million plus. Fifth, moral hazard. If you bail out banks, they'll take more risks because they know the government will save them. But if you don't bail them out, the system collapses. The dilemma remains unsolved to this day. Chapter 10. The world that followed after 2008. The world changed forever. Central banks began quantitative easing, QE, printing money and flooding markets. In America, the Occupy Wall Street movement erupted. We are the 99%. In Europe, austerity began. Unemployment in Greece hit 25%, youth unemployment 50%. China launched a $586 billion stimulus package. Infrastructure building fever began. Cryptocurrency was born in 2009. Bitcoin. Satoshi Nakamoto wrote, "Against the betrayal of banks." And Lehman? Its name is now just a warning, a case study in business schools, footage in documentaries. Barclays now sits in that Wall Street building. Epilogue. Fold's words in a 2015 interview. Dick Fold was asked, "What was your biggest mistake?" He was silent for a moment. Then he said, "I thought we were invincible. I thought the government would save us. But the government didn't. And we couldn't save ourselves." Whether tears filled his eyes, the camera didn't capture. But his voice trembled. Lehman Brothers died. But its story lives on as a permanent warning. Don't be arrogant. Don't ignore the system. And never think that because you're big, you will always be saved. 158 years of history. 1 week. And then, the world changed. Lehman Brothers died. But the world economy still carries that wound. Camera slowly zooms in. September 15, 2008. New York City. Lehman Brothers headquarters. A 158-year-old bank. Wall Street's fourth largest investment bank. $639 billion in assets. $619 billion in debt. Cut to 1:45 a.m. CEO Dick Fold picks up the phone. Tim Geithner, New York Fed, says no bailout. Cut to noon. Lehman Brothers files for Chapter 11 bankruptcy. The largest bankruptcy in history. Wall Street traders begin to cry. The stock market drops 500 points in 1 hour. Text fades onto the screen. One bank died. The world economy began to shake.